As I say, you've spent a lot of your career dealing with and around China. Start with what I would call mainland China right now. I think that if you go back to the first of the year, people expect it to really be a rebound year for China, given what had happened with COVID. Doesn't seem to be playing out that way.
You're so right, David. In the beginning of the year, the markets went up 20%. People expected markets to be up another 10 to 20% in mainland China. With all the geopolitical issues going on, if anyone had guessed, you would think Taiwan would be down and the rest of Asia would be sort of so-so, and ASEAN would be doing relatively well. And if you look actually today, it's a very, very different story. Number one, what you saw is as China came out of COVID, it has been taking much longer. Chinese consumers were supposed to be the big force carrying us out of COVID and sort of creating this huge growth in the economy. And they have been really scared because they went through their savings during 3 years and they are trying to save more. And the uncertainties that have been created both internally and by geopolitics is getting the Chinese consumer to save more and spend less. Now, at the same time, I should say, what happened also is that in Taiwan, for example, where we did not necessarily expect this kind of rise of like 22% year to date, who knew in the beginning of the year that with AI becoming so important, the microchip that is made in Taiwan would become even more important and the Taiwanese market would do so well. Last but not least, of course, you've seen a lot of outflows from US and European and other global investors going out of China. If anything, the flows seem to be increasing coming into July than getting reduced. And a lot of very interesting phenomena going on that point.
So, Afsaneh, as a longtime investor, you're the first one to know that markets go up, markets go down. You can't overreact to short-term developments. When you look at mainland, again, I'll call it mainland China for the moment, how much of this is a short-term thing, do you think, and how much are there larger underlying structural factors that may hold back mainland China from the remarkable growth we've seen over the last generation?
So, David, I think the fact that you have 20% youth unemployment is a very big factor. That's a long-term issue, and that is not going to get affected by short-term monetary policy changes, right? So even though at the moment the monetary policy is trying to help push the economy forward, the job creation is much less, particularly because these jobs were in the tech sector, in services, in areas that have got affected and have not been expanding as much as you would expect. The other area I think to look at in China that has been affected is sort of the old age population and the demographics. That also, if you look long term, is a big issue with the aging of the population in China. With Secretary Yellen's visit, we went from decoupling to de-risking, and what the term she used last week while she was in China was diversifying. I think every country having experienced the issues, the supply chain issues that they experienced, including the US during COVID, is diversifying its sources of input and trade. And we saw, for example, Mexico overtake China in terms of trade. Those, I think, are longer-term issues as countries, including the US, diversify trade sources. There is one big positive, though, looking at China, which is that they have continued to invest in their green economy, not as much as they could or should. In fact, Mr. Kerry will be going there shortly, and I think that meeting will be quite important. But even looking at their domestic economy, the Chinese are putting in a lot of resources and investments into EV, into solar. As you know, they're still the biggest supplier to the world of solar facilities, as well as now starting to become the largest producer of EV.
Afsaneh, you mentioned the demographics issues in China. Perhaps a related issue is, for some time, China was something of a talent magnet. I remember going over there a few years ago, and they were attracting Chinese-American scientists back to mainland China to live with their families. Is there a risk of really not altogether turning it around, but actually reducing the attraction of mainland China for talent from around the world because of some of the reforms, as he would put it, from President Xi?
I think we have about 300,000 Chinese students in the US, and a lot of them would go back to China. And there's a question mark as to whether that flow will be back to China or back, some stay here, some go into other countries for exactly the reason you said. For example, AI, which is a very exciting area for some of the scientists you were talking about, is heavily government controlled, right? So if you are working for the larger state-owned enterprises and under direct government supervision, you will be benefiting from working on AI. But if you're working in the private sector, in some of the private sector companies, or the ones that were working with the venture industry in the US, that is something that is now a thing of the past. We've seen that a kind of cooperation between venture in the US and venture in China dwindle. It's not gone. It's still there is still some going on, but at a very different level. So that will definitely impact the flow of the brain flow, as it were, into China.
We've seen President Xi be able to pivot. I mean, he did certainly on the COVID shutdown, very abruptly pivoted. And we've seen him change in various ways, morph. What do you think the likelihood is that he'll take a look at some of the phenomena that you're describing right now and say, you know what, I may need to back off a little bit on the introduction of really communist ideology throughout the business sphere, which is really what he's emphasizing very heavily. And I got to back off that a little bit to attract some of the people and the investment that I need.
I think one thing that President Xi has created, which will be hard to undo, is uncertainty. He's created uncertainty for his own population, so they're not comfortable investing. For local corporates in China, so they're investing some in China, but more abroad, and for foreign investors, because he can change the rules exactly as you said, from one day to the next. It's great that he changed COVID in one day, but what he saw is that uncertainty that he created, the fact that he could change things again tomorrow on the tech sector or on education sector, as he did with EdTech, again, for good reason or bad reason, those kind of autocratic measures in the market create huge uncertainty and outflows of capital.
And to summarize, Afsaneh, as an investor who knows this part of the world well, somebody who particularly has been emphasized green as well as emphasized technology, as you take a look at some of these markets, what are at the top of your lists? I mean, if it's not mainland China, what is it? Is it India? Is it South Korea? Is it Indonesia? Is it Japan? What are the ones at the top of your list?
I think ASEAN is still a great region to invest in, but also I think we continue to invest in Korea. We continue to invest in Taiwan. If anything, what has been interesting, even though a lot of the chip manufacturing is coming to the US, which is great, Taiwan still can produce the most exact chips that you need in AI. And then I think India has a huge population, obviously. So local growth in India will be super exciting. It is still relatively a democratic society. And I think what we've seen with markets is that generally those kinds of societies will do better. And I think if Mr. Modi doesn't get into the habit of changing things too fast, and you do have a pretty vibrant private sector in India, and you improve the status of the banking sector to be more open, India could be incredibly exciting across the board, from manufacturing to services, and now to the green economy, really competing in a big way, not just with China, but with the rest of the world. So I think India will be super interesting to watch over the next 5-10 years and see if it becomes, instead of 3% of the world economy, not just 5%, but maybe 7 or 8 to under 10%. So that is the place to watch, I think.